Hello there, in today's video I'll just be giving you a quick update on EPR Properties, what they've been doing, what's been happening in the world and how that could affect the share price and the share in general. If you're an investor in EPR Properties, this is a video you will want to watch. If you're new to this channel, welcome. My name's Andy and on this channel I like to talk about money and success. If you're interested in making, saving or investing money, please be sure to hit that subscribe button down below, hit the notification bell and then you'll get notified every time I release a new video. And if you enjoy this video and find it useful, please do remember to hit the thumbs up because that helps the YouTube algorithm, which in turn helps me and I do appreciate it. I've had a number of people request that I make an update video on EPR Properties, so this is that video. I have actually got every intention to make a more in-depth update video on EPR Properties when their Q4 2020 information has been released. It hasn't been released yet, and as such I can't actually analyze it yet. So when that's released, and I am keeping an eye on that, I will make a video in depth straight away. I was hoping that it'd be out by now, but sadly it's not. So if you are interested in that, hit the subscribe button down below and you'll get notified when I release that video, which I'm hoping to be fairly soon. If you're interested in EPR Properties and the financials and whatnot, then what I would suggest you do is check out my playlist for EPR Properties up there, and I'll put a link in the description down below because I've made a number of videos about EPR Properties where I have been following their progress and I've analysed them in detail. In this video, I'm just going to really give you a news update. So let's have a little look at some news. So this article here gives you some information. You can see EPR Properties collects 46% of pre-COVID contractual cash revenue in Q4 2020, consistent with its estimated cash collection range previously provided. That's obviously good because it's doing what it predicted to do. If we look down a bit lower there, you can see that on December the 29th, 2020, EPR Properties sold 6 private schools and 4 early childhood education centres for net proceeds totalling 201 million and expects to recognise a gain on the sale of 40 million during Q4. It also sold 4 experiential properties and 2 land parcels for net proceeds totaling 23 million and expects to recognise a gain from the sale of approximately 10 million. So that's good. They're making profits by selling things. It's not good that they're selling assets. I'm not someone who particularly likes assets being sold. I like to acquire assets that give me an income, and I'd like to invest in businesses really that do the same. But they have sold them at a profit, so that's a good thing. It's not like they've had a fire sale and sold things off at a loss. They're selling them and making a profit on those sales. Now you can see here the company used a portion of the disposition proceeds to pay down its revolving credit facility by 160 million on the 30th December 2020 and expects to pay down an additional 46 million on either its private placement notes or its revolving credit facility on January the 19th, 2021. So that's good as well. They're paying down the debts. That's obviously what you want a company to be doing. You don't want it to have massive growing debts, so they're taking responsibility. There's a very good management team in place for EPR Properties. If you see my previous videos, you'll get a feel for that and what they have been doing. With cash on hand of more than 1 billion at December the 31st, 2020, including 590 million outstanding under its 1 billion revolving credit facility, EPR believes it's well positioned to withstand the impact of the pandemic, and as of the 31st 2020, 92% of the company's non-theatre properties are open and 58% of the theatre properties are open, excluding normal seasonal closings. So now let's take a look at theatres, because if you've watched my previous videos, you'll know that a large proportion of EPR's rents are theatres and a large portion of their properties are also theatres. So obviously it's important that theatres survive for EPR to thrive. Now I will just caveat that by saying when I say a large proportion, it's 46% of their revenue comes in from theatres. So it's not all of their revenue. And you'll notice from its peak, EPR Properties share price is currently about 60% down. So the stock market has actually devalued those properties pretty much to zero right now in terms of their revenue building capacity. As a comeback play, if you're looking for a stock as a comeback play, EPR Properties still could well be that stock. I'll be honest, I've bought this a lot cheaper than its current price. I've bought it at its current price. And I do think there's a lot of room to grow still. And if you look at the share price charts, you'll see that there is. I've mentioned this in previous videos. I'll put a link to one up there and in the description down below where I explain that. So if you are interested in looking into that in more detail, you can. And like I say, I will be analysing this in much more detail as soon as them Q4 results are out. But one of the key things to note here is that movie theatres are a key client for EPR Properties. AMC theatres in particular are their biggest tenant, making up, I believe, 18% of the rents for EPR Properties. With that in mind, you have to consider how news from Warner Brothers Studios, which is owned by AT&T, and if you watch my most recent AT&T video, I'll put a link up there and in the description down below, you will already know that they announced that they would be releasing all Warner Brothers Studios movies in 2021 direct to their HBO Max streaming service at the same time as releasing them in the theatres. So how would that affect the movie theatres? Well, we're going to look at that in a moment, and I will show you how that will affect things. Let's look how streaming has affected movie theatres over the past, and these slides I'm going to show you now are from the AMC presentation, and it's their 2019 presentation because their 2020 presentation again isn't out yet. But as soon as things are, I will start reviewing all of these, and it might be that my EPR, my next video, is a real big one about EPR. If you look at the screen now, you can see theatre exhibition is a stable and growing industry. And the key thing to see is since 98 up to 2018, the income has almost doubled, basically, or the revenue, if you like, has almost doubled. And you can see all the years. 98 was a record year, 99 was a record year, 2000 was a record year, and so on. And you can see that actually 2018 was a record year as well. And if you look along the bottom, you can see when things were launched. So you can see Netflix launched its video on demand streaming in 2007. So that's now, you know, some 13 years ago. And the theatre admissions continued to grow. Hulu launched in 2008. Amazon Prime launched in 2011. Netflix started producing its own content in 2013. Now, in fairness, I think it's pretty level since then. If you look at 2013, 2014, 2015, all right, 2015 was a record, 2016 was a record, but 2017 was a drop back down again. 2018 was a new record. So you can see that 6 of the last 10 years have been record domestic box office years. So that is obviously a great news for the cinemas. And you can see that Netflix in 2017 actually had already reached a market penetration in the US of 50% of US households. So half of the people in the US were able to watch things on Netflix, and yet theatre admissions were still increasing. So now let's look at this slide here, and I think this is an interesting slide to see because you can see here that the more time people spend watching streaming services, the more likely they are to go to the cinema. So you can see someone who spends 7 hours per week on average in 12-month period has visited the cinema theatre 1 to 2 times. 8 hours a week or more, they're likely to have visited the movie theatre 3 to 5 times. 10 hours a week or more on streaming 6 to 8 times. 11 hours per week or more, and you're looking at 9 or more times visiting the cinema in the previous year. So actually there's a correlation, this is according to AMC Theatre's slide presentation, between streaming services and going to the theatre or the movie theatre. And actually the correlation isn't what you might expect. It's actually a positive thing. It seems that people watch things on the movies and then go to the theatre. Now bear in mind this is from their 2019 slides. So we haven't yet taken into effect or into account when they were making these slides how this would be affected by the move that Warner Brothers Studio have made, which is during 2021 to release things direct to the theatre and direct on their streaming at the same time. But we have now had the first of their movies released, and that was Wonder Woman 1984. So let's have a look at how that actually performed. As you can see here, Wonder Woman 1984 box office hits a pandemic high in the cinema. Blockbuster pulls in 16.7 million in domestic cinema openings, the highest since theatres closed in March. Wonder Woman 1984 pulled in roughly 36.1 million at theatres worldwide over the Christmas holiday weekend, distributor Warner Brothers said on Sunday as it confirmed plans for a third film in the superhero franchise. Of that, an estimated 16.7 million came from the US and Canadian theatres, the AT&T owned studio said. That ranked as the highest domestic box office opening since the novel coronavirus shuttered theatres in March. The numbers were a fraction of those typical for a big budget action film. Millions of people also watched Wonder Woman 84 at home in the United States, where the movie was made available to stream via Warner Media's HBO Max, the company said in its statement. Total viewing hours on HBO Max tripled on Friday compared with a typical day in the previous month, according to the statement. Warner Brothers said it would accelerate development of a third Wonder Woman movie, also written and directed by Patty Jenkins and starring Gal Gadot as the lasso-wielding warrior. So there you have it. So the movie theatres had a big uplift, despite it going direct to Warner Brothers Studios. And bear in mind, there are still lockdown orders and stay-at-home orders in place in various places. So people are going to be using the Warner Brothers platform, the HBO Max platform, to watch it on. But still, there was still a big growth in cinema going as well as. So it hasn't completely destroyed the cinema like was expected. And another thing it's worth noting is Warner Brothers themselves actually said that they only intend to do this for 2021. Now, I'm still on the fence as to whether that's the case. As I said in my previous video, I actually think there's a possibility that if it goes well for them doing it direct to HBO Max and to the theatre, they may continue to do that. But time's going to tell whether that's the case or not. But certainly from the theatre's point of view, the theatre seems to have done okay out of this. So it hasn't harmed the theatre quite as badly as was expected. Now, time will tell if future releases are positive or negative, and time's also going to tell how the effects of the vaccine are going to be. You've got to remember that going to the theatre isn't just about seeing the latest movie release. It's also a social experience. The average age of people who go, or the most common age that people go, are teenagers, and they tend to go with friends. They maybe go on a date or as a group of friends. So it's a social interaction. And obviously at the moment, social interactions are literally being locked down. If you're aware of what's going on in the UK right now, we're back into our third lockdown. So we're all meant to be staying at home. So obviously movie theatres here are all closed. In the US, you've got it different in different states. And on the flip side of that coin, we've now got 3 vaccines out that I'm aware of. We've got the Pfizer vaccine, we've got the AstraZeneca vaccine, and now we've got the Moderna vaccine. Certainly here in the UK, all 3 of those. And certainly in the UK, I know that the last time I looked, I think it was coming up to 2 million people had already been vaccinated. And I believe as of next week, they intend to be vaccinating 2 million people per week here in the UK, and we've only got a population of 60 something million. So actually at that kind of speed, it doesn't take all that long before you've vaccinated everybody. And if they can do that over here in the UK, I'm sure they can set up similar things over in the US as well. And obviously the rest of the world will also be able to vaccinate quickly as well. And once the world has had that, I personally am expecting the world will go back to some form of normality. Now, the interesting thing will be to see how that affects movie theatre going. Are people instantly going to start going back to movie theatres again? Personally, I think it's very likely. I can't wait to go back to the theatres again. And as you can see, I'm not a teenager anymore. So I do think that movie theatres, I think they're overly depressed. I mean, if you want a really controversial stock play, you could look at AMC. Their stock price at the moment is just over $2 per share. If everything opens up, that could be a really big comeback play. Now then, I just want to caution, a word of caution there, because AMC theatres, there is a chance that it could go bust. If lockdowns continue, if the vaccine rollout is slow, if the vaccine doesn't work even, there are a number of issues that could go wrong. As far as I'm aware, the vaccines have been well tested, the vaccines appear to be working, and so I'm expecting that actually 2022 will essentially be a normal year. 2021, I'm seeing that as somewhat of a transition year whilst things get back to normal. I mean, certainly here in the UK, the forecast seems to be that by the end of March, the vulnerable population, if you like, will have had the vaccine. After that, my expectation is we'll be able to open things back up. It'll be some kind of tiered structure whereby, people will still have to social distance and wear masks, and certainly theatres, if they are allowed to open, won't be at full capacity. But I expect that things will start to open back up again. And I personally expect come 2022, things will be pretty much back to normal. That's my personal expectation on it. You have to obviously decide what your expectation is before you make any investment decisions. Anyway, I hope you found that helpful. Thank you so much for watching, and bye-bye.